Mark Minervini, the self-made stock market wizard and two-time U.S. investing champion. He didn't work on Wall Street, he didn't have a fancy degree, but he created a system that helped him consistently beat the market for decades. And in this series, you'll learn exactly how he did it. This is episode 1 of our Minervini Masterclass, and today we're covering his big picture strategy, how to think like a super trader, what he looks for in a stock, and why mindset is everything. Let's start with the man himself. Mark Minervini started like most of us. No special training, just a passion for the markets. He began trading in the early 1980s, and after 6 years of trial and error, he developed what he calls SEPA, or Specific Entry Point Analysis. By 1997, he won the U.S. Investing Championship with a return of 155% in 1 year, and he did it again in 2021. This time with a jaw-dropping 334% in a single year, using the exact same method. Minervini's strategy isn't about guessing or gambling. It's about finding high-growth stocks at just the right moment and managing risk better than anyone else. Minervini doesn't look for average returns. He looks for super performance. So what is that? Super performance is when a stock grows by 100%, 200%, even 1,000% in just months or a couple of years. Think Tesla, Nvidia, Apple, or Netflix in their early stages. He studied hundreds of historical winners and found that before these stocks took off, they shared the same DNA: explosive earnings and sales, strong technical chart patterns, industry leadership, high relative strength, tight price consolidations. And the best part? You don't need to predict the news or time the economy. Just study the price and volume, the footprints of big money. Minervini's entire strategy is built around a system he calls SEPA, or Specific Entry Point Analysis. It has 3 core parts. Find super stocks. These are high-growth companies with explosive fundamentals, triple-digit earnings growth, big sales increases, and accelerating margins. Wait for the perfect chart setup. He doesn't buy too early. He waits for breakouts, tight consolidations, or classic bases like flat bases, cup with handle, or VCP, volatility contraction pattern. Manage risk ruthlessly. He always uses tight stop losses, typically 5% to 8% from entry. If the stock doesn't behave, he's out. No questions, no emotion. Minervini says you should never enter a stock unless you have a very specific reason, a very specific setup, and a very specific stop loss. That's why he calls it Specific Entry Point Analysis. One of the biggest myths in trading is that you have to buy low, sell high. Minervini completely rejects that. Instead, he says, buy high, sell higher. Why? Because most people lose money by trying to buy bottoms that keep falling. When a stock breaks out of a tight base with big volume, it usually means institutions are buying. That's the moment he steps in. This is what he calls confirmation-based trading. Wait until the market tells you the stock is ready. Key indicators he watches: relative strength versus S&P 500. Volume spikes on breakout days, tight sideways ranges after big runs, a sign of strength. One of the biggest myths in trading is that you have to buy low, sell high. Minervini completely rejects that. Instead, he says, buy high, sell higher. Why? Because most people lose money by trying to buy bottoms that keep falling. When a stock breaks out of a tight base with big volume, it usually means institutions are buying. That's the moment he steps in. This is what he calls confirmation-based trading. Wait until the market tells you the stock is ready. But even with the perfect strategy, Minervini says most people still fail. Why? Mindset. Here are 3 rules he lives by. Rule number 1, cut losses quickly. Minervini never lets a small loss become a big one. He'd rather be wrong fast than hold and hope. Rule number 2, focus on risk-reward. He only takes trades where the upside is 2 to 3 times greater than the downside. Rule number 3, consistency beats perfection. You don't have to win every trade. You just have to control losses and let winners run. Successful trading isn't about being right. It's about managing risk and stacking the odds in your favor.